Good morning, everybody. Hope everybody's well. It's Wednesday. So I'm just going to start off by I'm just going to start off by going through what how we've got on. I've been very, very, very happy this week. Even a better start than we had, last week. We had a bit of a morning yesterday where we were in a bit of drawdown, but it came back, and obviously we chose to close out and have a slightly higher entry. So the afternoon was nice and smooth. So that's obviously how I prefer it. So yeah, but obviously anyone who didn't manage to close out was obviously okay because everything carried on in the same direction. It just popped up slightly beforehand. So pretty happy. Great start. No red days yesterday. Was obviously yesterday morning. Potentially your USD was very very close, but obviously popped down nicely. But right, let's have a look through everything. And then obviously we can obviously explain what's happening this morning. So it's a little bit of a trickier morning this morning, and it's probably the first morning in a while where I've been a bit, where'd you go? What do you do? What's the outlook? So everything's quite messy. Oil's still tumbling, right? So the only thing with oil still tumbling, it isn't necessarily going to weaken the dollar too much, but obviously it's lowering the inflation worries because obviously a high price of oil because of how much the world, I don't think this really, shows how much we need and utilize oil. Um, so got a couple more people joining. There we go. Um, yeah, so we're obviously looking at oil dropping back, even below 75 now. It'd be interesting to see what happens. We broke through obviously these kind of mid-war, the lows here we've broke cleanly through, broke through yesterday. We're carrying on, So if you think this week already, if you think we finished last week at 84, we're now down at 74. So anything below 80 is a lot better. It's calling. And I think that is what is starting to kind of show up here. We got obviously lower inflation, so CPI data, PPI for obviously the UK. So, I think we're going to see this across the board. We're not going to have anyone rushing in. No one's going to be like, right, you know what, this war's over, interest rates down, down, down. That's not going to happen. But obviously, it's going to put everyone in a very positive, outlook here. So that's obviously one thing just to keep an eye on. I'll probably get rid of this now. Get rid of this here. We don't need it. And then I'll probably be focusing. It'd be interesting to see what happens in this kind of area here. So that will be my next kind of call. If we're looking at oil, in regards to where should it be, I would say to be honest, if you averaged you know that oil's going to spend majority of its time probably around this area here, right? So probably between 50 to 75. All right. So we're back to a reasonable price of oil here. Yeah. Right. So anything below this, everyone's happy. Oil's always expensive anyway, but obviously it's not gonna, it's gonna help everything. And obviously it's gonna have a little tailwind on the dollar, but look how well dollar is holding to this 99,500. So it just goes to show the pricing, the oil of oil dropping has kind of exhausted, hurting the dollar. All right, because if it had, I mean, if you look how much oil's moved, right? Oil's moved, all of this. All right, dollar hasn't really done that. It opened up here and it's pretty much here. So it's holding well at 99,500. And obviously that's a testament to the US economy and obviously the overall expectations of it and where it actually is, right? So that's why I eventually went with obviously buying dollar this morning. Um, remember, well, one thing that I do completely differently, and even I only implemented this probably a couple of years ago. I was trading no problem before, but I've, suddenly one day thought, wouldn't it be easier if I identified which direction I'm going to take GBP USD, AED USD, before I've even hopped on that chart, and obviously what would that, look like? And to be honest, it really helps because, nine times out of ten, you don't even have to have the right direction, because we're going to have some markets which are going to do this, all right, or some trading sessions which are going to do, this. We're going to have some bit like yesterday where we're trying to sell it and it's popped up, but then it's popped back down again. All right, so if we are, trying to sell here. All right, it doesn't matter if we go in a bit of drawdown here, because we know that worst case, we got our three entries, we come back down here, we've made a bit of money out of it. So lots of times it's placement as opposed to obviously, getting the overall direction right. Now, the reason why I went to buy the pound, the dollar, I believe because obviously it's, new Fed chair Kevin Warsh. It's his first FOMC, right? He's supposed to be optimistic. He's a lot more optimistic than Jerome Powell was. That's why Trump's hired him. We've then got Trump speaking as well at 2:30. So the build up for everything. For those of you who haven't noticed, I tell everyone, look at tonality on any speech. All right, Trump, whenever he speaks, he will not say a bad word about the US. His overall speech is built on building the dollar. All right, that is probably 99% of the time. He wants to come off, have a look at the dollar, and see that obviously he's added some value to it because essentially it's probably the only thing he's very good at. That is his job. He's got to ensure confidence in the American people, in the world, that the dollar is the strongest currency in the world, and obviously why it's the denominating currency. That is his job, right? One thing that I'm looking at quite closely is 10-year yields. Now, unlike the dollar, these are dropping. All right, but obviously we're holding these, lows here. We're in amber, so we're in, no kind of danger. Those of you who are on the Sunday night live a few weeks ago, I would expect yields to be trading around 4 to 4.5%. That's obviously where we want them. If we look at yields over time, and obviously, can look at it, yes, it's a bit all over the place. But obviously, if we if we took a happy equilibrium at the moment, it would be round about where these guys are right now. All right, so it'd be somewhere between here and here. That would be that happy place. All right. So let's, wait and see what happens here. Right, let's just get us back on two and zoom in. Whoop. There we go. Right. So, but I don't like that obviously yields are continuing to drop, so I'm monitoring these quite closely. But again, on the flip side, for all you gold traders, remember gold, times of obviously escalation, war, yes, gold 99% of the time should pump up. All right. It's not been a war about gold, so obviously gold's been hit hard. It's been a war about oil. All right. Now, why else would obviously gold pop up? High inflation. Well, if inflation is going to come down, that's not going to, warrant anyone trying to buy gold. All right. So naturally, there's a few things here, that, is against gold. War is over, so obviously there's no need to obviously, well, potentially over for a bit. There's no need to obviously pump money into a safe haven. All right, and also inflation is cooling, so there's no need to pump money into a safe haven. So ranges on gold. I can't see gold coming back up for a while, and obviously trading at these 500 or 5,000s. I actually think gold's probably going to be trapped in potentially this, area here where we're not going to break above here, this 4,890, but we're also not in any danger to break below the 4,000. I would like gold to drift up slightly, trading about 4.5. But obviously that's just the kind of overall picture. So the reason why I've done everything this way round is, you can see at the moment it's a little bit confusing here, in regards to obviously what's happening. Um, Stock market, we obviously had the SpaceX IPO. There's been lots of talk about the SpaceX IPO and obviously why it's been valued the way it has, why everyone's bought the stocks the way they have, when it's a company that if effectively doesn't make money. It just shows that the drive of hype is crazy. So it'd be interesting to see what happens, when something opens up as high as what it has. Um, it'll be interesting to see if it can go higher or if it's already hit its peak. So let's wait and see, what happens. I'll speak more about SpaceX tomorrow. So I'll go through it with everyone. Just it's something interesting to speak about, making you look smart with all your all your co-workers at lunchtime. But yeah, I'll do a breakdown on it anyway about obviously how I feel about it, why I think it's yeah, I think like I mentioned the last week, Starlink has been its kind of main driver. So yeah, right. Let's now go through everything. So we've agreed it's a little bit, mixed, but obviously, I can't see this 99 500 breaking, and I do think there's going to be a bit of optimism with the dollar. I don't think we're going to be back at this 100, might be, but I think there's going to be enough optimism, and they kind of know what they're doing. I think it's about propping the dollar up while times are hard, while oil is repriced, while yields are obviously finding it a bit hard. It's then propping the dollar up, making sure that there's enough hype to obviously carry it through, while obviously this price is while everything else is repriced. So Aussie, we haven't actually traded it this week. Again, stayed away from it. A little bit messy. Um, so yeah, I just don't like where it is. Pound, I'm probably going to close this trigger. I was hoping, we obviously had this news earlier. I was hoping we were going to get this happen where we're going to spike in, and then move this way. Had a feeling inflation was going to come in a bit cooler. However, it did spike up, but we were literally, what were we, 2 pips away from our entry. So, it is what it is. So I'm probably going to write that one off because, yeah, I can't see it going down. Your euro, I like this move to the downside. Note today that I've kept stops quite small, or this morning I've kept stops, quite small. what I'm kind of hoping is these highs are tested here, potentially pushing up a little bit higher, triggering one and two. Remember, our first entry is actually down here, and then second entry is here, and obviously third entry is here. But obviously, that's what I'm kind of looking at here. So hoping for this to tap and then obviously continue down. Hopefully TP1 is reasonable. USDJPY, I just don't like where it is. I'd rather trade this with dollar weakness as opposed to dollar strength because you can see it's a bit like it has been. These candles here, all right? There's none of these candles to the upside, right? All of them are to the downside, wick, 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 so that means that there's pressure, but not enough pressure. So that's why I'm kind of, yeah, I'd rather be selling USDJPY at the moment than buying it because I just believe it's a bit high. If you think every time it's come up here, we've had a big crash, big crash. We haven't had this crash yet. So if you think here, that is the equivalent of us popping back down here. All right, we've not had that. So that to me, tells me, and this is the minimum. Remember, we've obviously had this one too, where it is popped all the way back down here. I do think that's coming. I just don't know when, and obviously we do need a dollar, shift for us to achieve that. And obviously, last but not least, gold. Let's go on a 15-minute time frame here. I've obviously kept stops quite small on gold as well, but obviously hoping for a nice pop up into this area and then a tail off. Like I'd said, pound, showing that inflation's cooling. We're going to see a chain reaction across everything. That inflation is cooling, all priced down. War over. There is no worry at the moment, and obviously that's why the stock markets are slightly drifting up, slightly. But you got to remember on the flip side too, U.S. stock markets, if they're flying, what are they priced in? Dollars. All right. So what is everyone having to buy stocks in? Dollars. So naturally, that is probably overall what is propping up the dollar at the moment. But I do see gold probably coming down and tapping these areas here. However, we haven't had a trigger yet this morning, and obviously I placed everything where it is. I think it's too much risk to, could have placed it here. There's a lot of obviously liquidity a bit lower here. But obviously, I'd rather play it a little bit, safer, especially as we've had such a good start. So that's obviously what we're kind of looking at here. So yeah, but apart from that, right, let me go on the chat and I'll have a look at some questions for everybody. Right, Robin, has your GBP USD triggered? No, it hasn't. Think I'm aggressive enough. I think I need to do three entries instead of three at the precision entry. Yes, I would definitely do three. I'd stagger three entries. All right, because at least my kind of the reasoning of it is all right. Lots of times we actually have a trigger into entry one, and then we get this continuation, right? And there's two reasons why I do three. All right. And I'd always recommend splitting your entries up, so if you normally do say zero point 0.9, do 0.3, 0.3, 0.3 as an example. All right. But obviously, what does this do for everyone? It kind of, it's almost like I'm going to do a terrible drawing now, so I apologize to everyone. But it's like, imagine there's a pond, right? And you've got a fish here, yeah? I'm going to do a real child. Look at that for a fish. There we go. All right. You've got your one man here, all right? And obviously he's got his fishing rod, yeah? All right. With his little, float on it, yeah? All right. That's like you entering a one entry. All right. Remember we use, zonal here, right? Because it's impossible to get an entry right. Yeah. All right. So the reason why do three, all right, is because one, we're covering this whole zone here. All right. It's easier to target price coming into an area than it is to target an exact, level of entry. Yeah. All right. So, and then you got me here, all right, who's this good guy here, all right, really, really happy. And I'm basically casting a, net, all right. Now, there's more chance of me capturing this fish because I'm covering half of this pond here, all right. Than obviously him, he's covering this area here, yeah. All right, so that's kind of how you've got to, look at it. But it's all well and good. There's lots of, strategies which are a bit rubbish, called, martingale, where you would enter, one, two, three, four, five, and then keep entering, keep it entering, keep it entering. But obviously, especially with things like gold, where, gold can just carry on, right? And obviously, this is why most bots work off, martingale, and they'll just carry on until your account blows up. Yeah. All right. But obviously, at least here, you're just working out, right, here's my zone. How aggressive do I want to be? Number one. All right. And then, yeah, if you think about it here, we've got a, we're not trying to target a price. We've got a 14, 15 pip, zone here. All right, so it only has to come anywhere in here. It's a bit like if we had this, set up here, we've come in, potentially triggered two, but then it's come out and we're in a nice bit of profit. All right, and also what it means is a bit like euro yesterday. So if I click on euro here, all right, our euro yesterday looked a little bit like this. All right, where we've come up, right, it's blasted straight through and then it's turned here. All right. And what ended up happening yesterday was we did something like this, and then we did this. All right. Now, when you get this move here, if you've got your one entry, you have to come back to this entry just to be break even. All right. Whereas actually, when we got three entries here, so as soon as you're here, you're at break even. As soon as you come back here, these two are in proper profit. So, what I'm sort of noticed over the last, I think definitely this year, is that probably 80% of the time we get this chance. All right. We get this one chance where it comes back and we can close out. A bit like yesterday, the only reason we had a brilliant afternoon was because we had three entries. So yeah, hopefully that's explained it. Um, wouldn't mind a video explaining break even, taking partials, while keeping the trade going. Not that confident how to do it. No problem at all. So what we did yesterday, all right, imagine let's go on a random pair, all right, and we'll go through this now, all right. So imagine you've bought here, Robert, right? We're obviously targeting these highs and it stops here, all right. As soon as this trade hits this area here, all right, I would say this candle here closes, all right. So this candle here is closed. I would move your stops to break even, all right. Normally, I'd say 20, probably 20 pips would be ideal. All right. So 20 pips, moves stops to break even. Yeah. All right. Automatically. Gold, probably 50. But moving to break even. Now, this is what I was speaking to you guys about. Yesterday was, in regards to building up. So because it's Wednesday, because I'm pretty happy, I would probably rather than taking some profit, imagine our TP ones here, you might want to take half. But obviously, You've then got to think, right, you know what? I did really, really well yesterday, and I did really, really well Monday. So I'm actually gonna hold this, and I don't mind if my trade is stopped out at break even. All right. So that's the ideal goal that we're looking for every single session, right? Is we're at break even, so we can't lose anything, and then this just drifts up. All right. And then it all depends on obviously what your overall targets are in regards to daily targets, stuff like that. But I always recommend if you've had an impulse move like this, so you want to find a nice candle, you've broken through, previous level of resistance here. You can see now if I delete some of these drawings, you can see now. All right, this would have been a previous level of resistance here. It's now holding, right? So as soon as you broke through that, it's worth pulling stops to break even. All right, because if this is gonna come, and obviously it does happen where it'll come back here and then continue. We can address that afterwards. All right, but your goal, and this is the only goal, your goal each week isn't to get trades right. Right, that is not the goal, and that's the mistake that everybody makes. Right, your goal is not to get every trade right. Your goal is not to get half of them right. Your only goal is to be profitable by the end of the week. All right, this one could stop you out of break even. Right, it could even then continue and stop you out. But I'd much rather this scenario happen, right, where I'm stopped out at break even and I've watched it, than this one happen and I've had a really good trade, but obviously it's stopped me out. So remember that every single week, your goal is not to get trades right. Your goal is to take money out. All right. Your goal is to be in profit. Your goal is to build your account. Right. And it doesn't matter if you have a really scrappy week. We've had a few. Um, your goal is to make sure that at the end of the week, your journal is always green. All right. And it doesn't matter if it's weeks like this where it's small or it's weeks like this where it's nice and big. It doesn't matter. All right. It's just that your account is building. It's been worth you spending a week trading, learning. And obviously, maybe I'm a bit more cautious than other groups, because I just believe, longevity is key. Can even split your month up into, if we absolutely smash it this week, it might be that, what, we're like, well, we're going to be really profitable this month anyway. Let's just go for, yeah, let's just up our aggression, the last, 7 days. All right. We can do things like that. So, yeah. Right. I like the analogy, Robin. So you split three lots evenly. Yeah, yeah, yeah. Split it evenly. If anything, it's going to lower your risk. And if it's one thing that I've noticed from everyone, lower the risk, the better. I'd say 99% of people in this space, stop learning because they're taught incorrectly, right? Your goal for the first year is one, not to have to redeposit because you've blown a trading account. And, two is to, kind of do this movement, a profitable, going from a beginner to profitable, it's not this journey, all right? It's this journey here. It goes down a bit and then it comes up, goes down, comes up, goes up, comes down. And then what'll happen is you'll slowly, your curve starts to do this, all right? And it'll be a gradual climb. But this is the bit where everyone quits, right? Because everyone wants to get here, all right? So just don't, even if your account is in a little, I have guys who are like, yeah, I've been trading with 6 months and my account's still 10% down. I'm like, that's brilliant. That is brilliant. because if you think about it, if you are, if you're more than if you've blown it, and obviously think about in 6 months before that, you potentially might have blown it, so yeah, I always, say that that's brilliant, and don't kind of don't beat yourself up. That's one thing that I'm really, really proud of. We've got guys here, who, and I know that they find it hard. They've been in the group since probably September, last year, but they haven't blown their trading accounts, But even then, they're still looking for this magic platform to copy, but what ends up happening is, obviously probably 90% of the guys in this space are very, very aggressive. They don't might not have the purest of intentions, So I would take a massive win for not obviously having to redeposit and losing your head. So yeah, but anyway, I've waffled on enough this morning. I hope everyone has a great morning, great day. Yeah, and let's, smash it. So have a good one, team. Have a good one.